It's interesting, Carl. We said that last night. It's been the theme all morning, and there's been no sellers. And one of the reasons there's been no sellers are the people who are now trading stocks in early hours have tremendous conviction in the face of being wrong. And it's rather incredible because the hubris of these people, they must think that Dow Jones Industrial Average has a lot of money indexed to it, and that money has to come out of Exxon and must go into Salesforce. And David, you have been probably at the forefront of our network of explaining the atavistic nature of the Dow, and yet you see this too. And aren't you kind of shocked that even after we remonstrate that this is not necessarily the right thing to do, that the buyers just get even more ferocious?
Yeah, your point's a good one. We make it all the time. I try not to ever talk about the Dow Jones because, as I've said so many times, it is a statistically irrelevant index given it's price weighted. That's the way they did it way back when. That's why they've had to keep doing it that way so that you can look at a chart and actually see it make sense. The S&P, of course, is market cap weighted, although lately we've talked a lot, guys, about how even that index is not necessarily reflective of the broader market any longer, given the incredible weightings of 5 enormous companies in it, Jim. This is a snapshot of a moment in time. I think that makes it interesting to see what the decisions are in terms of what goes into the index and out. But I kind of leave it at that. And to your point, there is a little bit of money, maybe 5 million shares need to be bought, but so little. It is not like the S&P at all. There is hardly any money indexed against the Dow Jones, as you say, Jim. And again, I always come back to the fact that while it's an interesting snapshot, the Dow is not a statistically relevant index. Sorry.
No, and it is curious. Of course, we've got Amgen, which is a not particularly fast-growing drug company, replacing Pfizer, which is a not particularly fast-growing company, but is very big. We have Honeywell, which is trying to reinvent itself as a software company, but is considered often to be the doppelganger of United Technologies, which is now Raytheon. That gets the boot. And then the most incredible one, Carl, is Salesforce, because, and I have Mark Benioff on tonight, Salesforce is a company that most people don't know what it does. I mean, it makes it so you're a better seller of things, but also, if you go to the website, you can see it's really the way to run your company and digitize it. Exxon is atavistic. And yet, if we look, if you go back in time, in 2013, the second quarter, it was the largest company. In 2010, by the way, it's largest of all four quarters, it was the largest. I mean, even in 2017, it was the sixth largest. And 2016, it was the in the fourth quarter, it was first and second. I mean, this was a huge company, and it has been crushed. I think the dividend is very much in question. And they kept Chevron, the goal of it. Standard Oil of California. They kept the wrong one. You know, they kept the bodies. They moved the gravestones.
Now, Jim, there is sort of this highly anecdotal reputation that it's somehow a Sports Illustrated cover kind of curse to get added and somewhat of a relief to get exited. I mean, do you buy any of that?
No, they're fun. Look, I think what'll happen is someone's going to say, Jim, you said no, and then Salesforce reports a number, the stock goes down, hey, you're washed up, the usual. But I would point out this. I would point out that there is no curse. And as David said, it's been it's kind of a bragging point. I mean, I think I informed Mark last night. Mark was working on masks, and I said, whoa, this is great. And he's, whoa. And it's a very nice thing to tell your mom.